All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse show. My name is Cyprian Francis. As always, my good friend Mike Patton, co-founder of Madison Trading House. The show is proudly brought to you by Madison Trading House, an amazing software. If you haven't checked it out, we'll be talking about it throughout the whole show. Mike, today's a big day, FOMC meeting. What are you
Yeah,
seeing?
man. We're seeing crazy volatility. The markets really took a nosedive a couple of days ago. I do believe it was mostly because everyone got the feeling that the Fed's going to raise rates a lot more than what everyone was thinking. So there's definitely a serious concern or expectation that maybe the Fed might raise by 75 basis points instead of 50. Now, keep in mind, these are huge jumps in interest rates. I mean, we haven't seen this in ages, right? So, but we also haven't seen inflation like this in ages either. So, I think the market's pretty much expecting that that's going to be the case. So, definitely we'll be watching that. That's going to come out at 2 o'clock Eastern today. They're going to make the decision. Definitely expect the markets to move if they go higher as far as the raise than expected. If they do 50 basis points, I think that's going to be considered okay because the market's already sold off so much. But if they go higher, yeah, we probably have some more downside coming. So,
Yeah, I just pulled up the S&P chart because on last week's episode we were like, "Oh man, it's been like a week of just, nothing."
yeah,
And
yeah,
then we had the CPI number basically on Friday, and
yeah,
we've just been tanking since, and now we're kind of settling in because the market's like, "Hey, we got a big event coming up, so maybe we need to chill on that till we find out what's going on." And you're absolutely right. Like if the Fed comes out, and we were talking before, if the Fed comes out and goes 75 basis points, like that's a huge momentous move.
right,
50 basis points is probably what's going to happen,
right.
and that's expected, but we'll see what comes of the news. But in addition to that, there's some more. You said there were some more Fed meetings this week from around the world that might
Yep.
take effect. Some Fed speakers. So all this news hitting the market this week should start to give us an idea of what the next leg is.
Yeah, because the next 3 days, so Chairman Powell, of course, will be speaking today. They'll have the FOMC press conference. Then you're going to have him speaking again on Friday. So, I mean, anytime Powell speaks, the world listens. That's the bottom line. The U.S. economy is the biggest in the world. So, if our central bank has something to say, everyone's going to listen because at least half the world's going to be affected by that decision. Also, we've got decisions and meetings coming up for like the Swiss National Bank, the Bank of Japan, I think even the Bank of England too. So there's a lot of major banks out there that are going to be making some policy decisions, and these are the leadership, the leading countries in the world as far as economically. So this week is going to be very interesting. Lots of volatility is likely to occur, and we do have to keep in mind that, I mean, with the inflation the way that it is, this is having enormous impacts on the economy. And it comes down to a point where you got to make the tough decision. Like if you see the ship is sinking, you got to start to cut weight somewhere. You got to do something. So if everything was okay, the Fed would be a little more cautious. Although I would say, and a lot of people might agree with me on this, that they should have done more sooner rather than wait till it gets to this point, then they suddenly have to catch up. So I do disagree with their policy as far as how long they took to make these decisions. But now they have to make these decisions. They got to do them fast and they got to do them big. And I think what the market's really going to look at is that if they raise by 75 basis points, which is 0.75% for those who don't know what that means, um, think about the impact on prices of everything. Like if you're borrowing money, a lot of people really took advantage of the lower interest rates that we saw, especially post 2020. Interest rates went down extremely low, right? People started buying houses, buying cars, all sorts of things. Now, almost every industry that we saw massive growth during that time suddenly is turning upside down. So we're seeing car companies laying off people left and right. We're seeing real estate companies laying off people left and right. Interest rates are a big deal because most people don't buy their car in cash. They don't buy their house in cash. We mortgage it or we loan it, in the case of a car. So if you're cutting off the legs of what's fueling that, then of course the end result's going to be pretty clear. But again, it has to happen. I mean, there's no way around it at this point. So, um, well, I'll go over that a little bit later. But I mean, that's the picture. It's just looking. It's not looking good, to be honest.
Yeah,
It's really
and
not looking good.
from all these different uh industry sectors, and then there's one more note I have here with oil is staying steady above 110, right? That's
Right.
definitely playing a factor into all these things. But we got rates increasing, we got real estate decreasing, we got crypto crashing. I mean, I don't even know if we want to touch it, but the crypto market is
It's
down
ugly.
like 2/3, right? In
Yeah.
the past 45 days. I think that was one of the statistics I heard.
Yeah.
But the fortunate part about the markets is when things like this happen, there are still opportunities to be found, which is
Right.
why we highlight and we utilize the amazing software that you and your team have developed at Medicine Trading House, because there are winners to be found, and we've been highlighting them over the past couple of weeks. And so, we got the Fed decision in a couple minutes or a couple hours, right? Like maybe like an hour and a
Right.
half that will dictate what's going to happen but we can find opportunities. And one of the ones that I believe that we talked about this morning was Redbox.
Yep.
And for those, I mean, I'm assuming everybody knows what Redbox is. I think it's a little bit more popular in, the rural communities, but you
Sure.
basically pull up to your Walgreens, there's a machine, you can rent some movies, you bring the DVD back. And so they have a very interesting story, and you're seeing some opportunities. What has been coming up on your radar, and why is this a name that you are seeing an opportunity in?
Well, let me qualify that. Right now, I think we're past the opportunity point, but there might be more coming. We'll see. This is not the typical stock that an average person will want to park a lot of money in. This is something a lot more speculative. But the thing about these sort of stocks is that, let's just give the background. So Redbox wasn't a company that was listed until they had a merger with a SPAC. A SPAC is a blank check company, as they call them, where you have some leadership that apparently has some success in business already. They open a fund and they just say, basically, give us your money and then we'll decide what to put the money into. So a lot of times they merge with other companies. One of the more recent ones was a Black Rifle Coffee Company. Now we got Redbox. Now, Redbox, I used to use Redbox all the time when it first came out because at the time, Netflix was just getting into streaming, if I remember correctly, and Redbox had good quality, high quality movies that you could easily just go to, like I said, 7-Eleven or something, Walgreens, go right down the corner, get the movies, go back to your place, watch it, then take it back. So it was great back then, but then once streaming took off, you kind of lost the appeal of it. But I still notice Redbox vending machines everywhere, and if they're there, somebody's using them because no one would keep them there unless they're making some money. So, in short, they do have an established market. So, what happened is after the company went public, which was, I believe, last year, it's not been that long, but then basically you have another company called Chicken Soup for the Soul, which I remember these guys had these. I remember that book, Chicken Soup for the Soul, and then I guess they formed a company over the years, and this company is going to basically buy out Redbox for I think $375 million, something along those lines. Let me see my notes. I think that was the number. Yep, 375 million is the valuation. um, so it's more of a merger, but so it's not it's not like a regular buyout where someone just says, "Here's how much money we're going to pay for this." It's a merger where basically Redbox gets absorbed into Chicken Soup for the Soul. I don't know what their new stock symbol will be, but the two companies will be together. So what's happened is this has sparked a lot of speculative interest, and I will firmly say that this is from retail traders. This is not from professional money managers, etc. But as we saw with GameStop and AMC last year, you can get some very dramatic price moves if enough people commit to it. So This is what basically happened here. You have a stock that's pretty obscure, not that big of a deal, but all of a sudden you got this one catalyst that comes in. It's just enough to spark some interest in the more speculative side of the market, and then bam, you get this big mover. So this stock went from on my chart, we went from somewhere in the $3 range all the way up to nearly $16. I think it actually went over $16, and now we're trading roughly around 11 today. So that gives you an idea of how much momentum was there. The trick with stocks like this is that you have to treat them like a day trader or a swing trader. You're not there because you think the company's worth value. You're not there because you think it's a great long-term investment. You're there to exploit the fact there are a lot of people who want to buy, and you just want to basically take advantage of that. So the faster you spot it, the better. With the software, we can actually spot this very quickly because when we look at it from a technical perspective, and I'll go over this later when I go over the screener, how you can find stocks like this. Once we look at it from purely a technical perspective, when we see the right amount of money flow coming in and we see the right response on the chart, then it's just a matter of time usually before a stock like this moves. So if you're thinking about getting into it now, and I would warn people, here's the bottom line: there's no way possible to project where the stock's going to go. In fact, the software tells me that right up front. There's no analyst following this company, so we can't really get a good idea of what the numbers look like. Fundamentally, there's very little data about this company as far as how it's been doing, et cetera. It's a newer, like I said, it's a newer company. Valuation wise, we do know that the numbers are some are bad, some are good, so it's not a stock that has quality. So therefore, you just have to treat it like that. I am watching carefully what institutions are doing, and I noticed that institutional ownership is down 22.5%. And that's a clear indication that they saw the opportunity and they took it. And this is the same thing that happened with GameStop and AMC. Once the momentum kicked in and once everybody got into that buying frenzy, if you were already early in, you knew to get out once the values start to get pretty ridiculous. So this company probably is only worth, maybe $4 or so if you really look at the hard numbers. But when it comes down to the chart, I mean, this thing has been a mover. And I do always keep track of what's happening down here. The score is very important. If I see a lot of red, not so good. But if you notice, we consistently had red for this stock at first, but we did have some periods where we could see up here, which is the inner circle, that green. And that's what I mean. Like when you were seeing these institutions start to buy, that was the key. That was the indication that there was some upside potential. But when they start to sell, which starts roughly right here, which was in May, that's when you start to try to liquidate, or at least you start to watch closely to make sure you're not holding forever. So this one did continue to run, but basically what that means, simply put, is that the institutions were selling all the way up and they're just selling and selling to new buyers coming in. Right now, though, probably not going to have too many big buyers coming in, so it'll be hard to keep the stock price up. So
So the
software helps us figure that out.
Yeah, and it seems like the trick to getting in on this signal would have been to keep an eye on the inner circle there, right?
Yes.
Where you're getting the two greens and a
Hmm.
red, knowing that one of the reds is kind of like default because they don't even, or defunct because they don't even have enough data to really get a good sense of like that fourth
Precisely.
layer. Um and so, seeing as the institutions caught the run up, there may be a play to the downside using some options here, right? Like that could be a trade idea if you think that the
Well,
the price could come down.
I'll give you my short answer. I do look for options plays consistently, but the difficulty with this one, and this is again another great feature of the software. So let me show you this.
Are you
Right.
going towards liquidity? You're going towards liquidity. No
Oh,
one's
you
trading
no,
the options.
no. In this case, they are. The liquidity is good, but what we have to keep in mind is the premium. Okay, for these options. So premiums are very, 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 very high for this. Okay. So that means if you buy a put or a call even for this stock, you are going to pay a lot of money to get into those options. Now, for people who are subscribers who want to go a little farther in their education, we do offer classes where I teach specifically how to do advanced analysis of options of information to figure out if you got an opportunity or not. So just bear that in mind for any of you who take the trial. Make sure when you take your walkthrough with us, make sure you ask us about those classes, because I can show you how you can look at this information and sorry, figure out some other things. That was one of my employees. Sorry. So in short, when we look at the implied volatility, which is, I'm not going to get into this too much because this is very technical, but if I get into options implied volatility, it's just saying how expensive options are. So this meter here, you can see it's mostly to the right. That's basically just telling us that right now these options are not that cheap, right? So if you buy puts, they're already pricing in huge amounts of movement. So you would have to get a lot more movement than what they're even expecting. And right now they're expecting a lot. So you need to get a lot more. So this is how people with GameStop and AMC, a lot of people jumped into the options because they didn't want to be in the stock, figured it was a safer bet, which probably it was. But because everyone was already expecting such great amounts of movement, they were just throwing these premiums up sky high. So basically, once the market moved, you just can't make enough money because they already priced it out. They already priced out that move. So in short, there are opportunities here. I'm constantly monitoring this particular stock, waiting for the right moment to jump in on some options. But if I do it, it's going to be something pretty complicated to play out. So my advice to anyone, if you're thinking about buying puts, I would say this probably is not, that's probably not a good idea. There are other ways you can do it, which would be more effective, like maybe a vertical spread, because that would neutralize some of the premium. But again, these are more advanced strategies. So we would have to, that's something I would have to save for another day. So in short, this one probably has made its run. I would expect to see more volatility, but I wouldn't count out the possibility of further gains. So if you already have this stock, there is a good chance you might be able to make some more. Just monitor it closely. Every time it pulls back, look to see if there's a quick recovery. If there is, there's still interest there. Also, keep an eye on social media. Like, look at what people are saying. So in the software, I can actually see what everyone's saying about this particular stock. On I'm not gonna, so I'll be careful not to scroll through stock twist too much, because a lot of people post some pretty inappropriate things. But the point is, there's a lot of talk about this particular stock everywhere. So the more you see people talking about a stock, especially in these forums, which are definitely retail guys, the more likely you're going to see some movement. So this is another way you can use this to help you to figure out where the opportunities lie, and then just kind of go from there.
And
All right.
this is a great example of something that would have been nice to get in on, let's say 30 days ago, maybe. And that's
Yep.
part of the value of being a member with Madison Trading House, and that's because on a day-to-day basis, Mike and his team and the members, they're chatting about these opportunities. They're utilizing the software to figure out these plays, and they're having an open dialogue about whether they would get in or not. And I think, Mike, you just did a great job of going through all the different points to validate why it might not be a good time to get in on this, but that's why we have the software. That's why we have the scanners, and we're running things day after day, because you're going to find another winner. If you've missed this one, that's okay. There's plenty of opportunities. And so if anybody's interested in joining that program, test driving the software for yourself, I went ahead and added a link in the description. So just click that, fill out the form, and get yourself a demo of Madison Trading House and utilize all these powerful tools. All right. So seeing as Redbox is kind of in the rear view mirror, is our next opportunity setting up for something that we might have a play in, or are we just kind of, finding a winner in a down economy and we don't know when the pop will come?
Well, FedEx is actually looking fairly good. So this one is something where I could see the potential. Now, the jump that we saw here, I'm just showing it on the chart. We had a huge jump in the price of FedEx. So here's where it was on the 13th, and here's where it was on the 14th. So clearly a pretty large jump there. What happened? Well, they did something that every investor always loves. They increased their dividend. So basically, according to the numbers, FedEx increased their quarterly dividend by 53%. Now, a dividend is a payout. For those who don't know, it's a payout that you get from a company on a quarterly basis, where they basically give you some of the profits that were generated during that previous quarter. So it's basically just an income source. It's like you're already a part owner of the company if you own shares. That's the idea of being a shareholder. And instead of like with Amazon or companies like that, they don't have dividends. They just reinvest the money back into the company, which is part of the reason why the stock price goes up. Whereas a dividend company, they usually their price will go up as well, but they're actually giving you out some of that money. So it doesn't actually go back into the stock price. It just goes into your pocket directly. Makes it a lot easier because you don't have to sell shares to get the income. So a lot of retirees, they love dividends because they just sit there, leave their stocks alone. They get into high quality stocks like FedEx, a very well established company, very successful, et cetera, and they let that go. So FedEx increasing their dividend basically makes this a very attractive stock, especially in an environment like we are now, where we have so many companies not doing so well. Like usually when the economy is good, technology is where everybody wants to be. Tech this, tech that. Everyone's seeing tech, 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 tech. It's going up, right? But when you get into a different set of circumstances where the economy is not looking so great, there's a tendency for people to move their funds into things that are more established and things that will still be needed no matter what. So, in other words, FedEx may not make as much money, possibly. I won't say they won't, but obviously, if the economy slows down, that slows down everything. So, fewer people are buying things, so fewer things get shipped. But that doesn't mean necessarily the company is going to lose money. And that's the key. There are certain things that still have to be done. Shipping has to be done no matter what. FedEx is an essential company. So therefore, as is UPS. So therefore, if FedEx has good fundamentals, if they're doing good at monetizing all that that buying and selling and people shipping things, then that's a good company to actually be in, especially during these times. So FedEx, if we look at it from the score perspective, when it came down to here, I did specifically mention this stock in detail as one of the potential opportunities. Now, we didn't talk about this on the podcast, but for the members, the subscribers, this is one of the stocks I brought it to their attention. And the reason why I did was very straightforward. I said, look, if you look at the numbers, the fundamentals are solid. It's green across the map. No matter how far back I look, it's green, 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 right? If I look at the valuation with the markets down, this puts FedEx in a good valuation point where we can get in, where it's relatively more valuable than what it would be if the price were higher. And if I look at the other scores, we didn't see institutions heavily buying, but they were buying before in this range. So basically, if we look where this green band is, where my cursor is going, that's months of institutional buying that we're seeing there. Not like broken up. It's like month after month after month after month, day after day. So that's what we were seeing. And they were buying in this range. So we know for sure, based on this history, that these guys are willing to buy in this price range. So when the valuation's now in the green, how much more likely they're going to buy? In my opinion, much more likely, because now you're actually at a price point that looks very attractive compared to the metrics that what the company's actually doing in sales, etc.
Can I
So the
ask a
chart,
quick question? Can I
sure,
ask a
sure.
quick question on so that makes a lot of sense, right?
Mhm.
And when you look at the buying and the price point, so what is the line that's in that? What does that represent?
That is actually the tracking of the score itself. So the score is an actual number. It takes all four components, combines them into an aggregate number. So when this line is going up, it means the score is improving. When it's going down, it means it's not. Now remember, part of the score is the actual technical score. So if the stock's going down, no matter what, it's going to bring the score down because the technical side is losing. But what I pay more attention to is how stable that line is and if it's typically above 50 or below. If it's typically above 50, that's the stock that actually has some good metrics. If its score on average is still above that halfway point, that's good. A lot of the worst stocks you'll see their scores are consistently below 50, and of course over time it brings down the stock itself. So if we're not likely to get a breakaway like huge trending score that just keeps getting better and better for a company like FedEx. It's too big of a company. There's too many people involved in trading it, so it's not likely to catch momentum like Redbox might. But this is the sort of stock that you get paid a dividend for holding it, so that's a big plus. And it actually has a likelihood of continuing to go up. In fact, analysts have been pretty positive about this stock. Currently, the middle expectation, the halfway point of all the analysts, and there's tons of them analyzing this stock. Believe me, the midpoint is $299 right now. The stock is currently at 234, so we got about 60 plus dollars of likely upside potential. We just had Bank of America. They put their target at 265, so that's about $30 above where we are now. JP Morgan is overweight, meaning that they want to they're saying basically we're heavy in this stock. We really feel good about this company. The lowest estimate is 231, which puts it $3, $3 a share below where we are now. That's the lowest estimate. So no one really thinks that this company is worth less than what it is now. That's my point. Everyone across the board, all major analysts agree this stock is worth at least what it is now. So if we can catch that opportunity where you've got some good news, a dividend increase, you got some new management, you got some activist investors, D. Shaw are involved in this. You've got a lot of good things happening, and if I compare this to its main rival, UPS, I just want you to take a picture in your head of what the numbers look like here. So you have green, green, yellow, green, right? I go to UPS. What does it look like? Well, red on the chart, yellow here, green there, yellow there. So if I'm choosing between these two companies right now, it's a no-brainer. FedEx is the better choice at the moment. So this is another nice feature of the software that I can compare apples to apples. I can say, okay, well, I want to buy a transport company, that does, air shipping and stuff. Which do I choose, FedEx or UPS? I mean, these are pretty much, or except for DHL, these are your only real choices. So if I'm going to choose, I'll choose FedEx because it has a much better profile, and it also has more reasons for people to want to buy it now. So in short, FedEx is looking pretty good. UPS, if you look at the estimates, notice that its lowest estimate is significantly below where we are now, 148. We're currently at 176. So people, if you're holding UPS, not a bad company. I'm sure it's going to be around for a long time. But right now, if you want to put your money where it's a little safer, I would say FedEx, hands down,
And
better
this
choice.
is and these are results on almost record level fuel prices, right?
Yeah,
So
yeah,
imagine if the fuel prices come down a bit.
yep,
I suppose that these transport companies correlate with energy on a maybe week to week, but if the oil prices can come down a bit, that's a good sign for FedEx. And um I like it. I like everything that you just went through with FedEx. So,
yeah, yep,
e-commerce is a big player. They're not going to be going away. So
right,
great find, Mike.
yep.
And so, what I would want to know is, as a Madison Trading House user myself, what can I do to create opportunities to find these types of winners on my own, right? Like I know, being logged into the community, people are always dropping names and stuff, but what's the fastest way for me as a user to set this up to find these fast moving stocks?
Excellent question. Okay, so we do obviously want our users to be as independent as possible. So let me show you how you can find you can find good value stocks. But for right now, actually, let's focus our attention on how do you find something that's really moving, like really, really moving. Okay, here's how I do it. I'll go to the screener. Let's go to new, and I'm going to just go to score for right now. And let me also go to price because I don't want anything that's too inexpensive. So I've chosen two criteria. So in the screener, you select the criteria you want to filter. You just check the box first. Makes it a lot easier so you don't have to look at too many things at once. Then you hit apply criteria. So now it's showing me two rectangles on the left. One is the price, and the other is the score. So first, I'm going to sort the score. Now, there's certain things I want. If a stock's really going to fly, I mean, really move up, I want green technical and I want green on the insider activity. That's a must. Now, not a lot of stocks are going to fit this profile, just to let you know up front, but let's just look at it and we'll see how this works. So, what I've done is I've basically filtered down to 45 stocks, and look at where it was at the beginning. I had 2,600, or sorry, 8,493 stocks that were out there. But now I've done this, I've filtered it down to 45. Now, I have not said anything about valuation. I have not said anything about fundamentals. I'm just saying, look, find me something that's moving, kind of like a red box sort of opportunity, and I can set prices. I can say, you know what, I don't want anything that's point 0.5, 50 cents a share or something like that. I want something that's at least in the dollars. So let's say I set my minimum to $3. Now I've got 33 stocks left, right? 416,000. Of course, no stock is that expensive, but that just means that this is the range that's going to show up. So I go run search. So here it is. Now I've got a list now of stocks between $3 and whatever the highest price possible. And I have them listed here, and I can sort them by price. I can sort them by other criteria too. And I can also do this. I can say, all right, well, let me add these symbols to a list. So I just clicked on that little folder there and I can create a list. Now I've already done this, so I'll just show you one of the lists I already created. I'll go to watch list, and here it is, Winter Wednesday today. Right, just created this before we spoke. We're actually going to post one of these stocks in our Instagram feed every Wednesday. We're going to post one stock that we found this way, so that way people can see what type of opportunities we're finding. Now, I want to, this one I didn't sort by price, so I have some stocks there that are lower priced than I want, but I'll just ignore that for now. So when I sorted by price, most expensive down to least, the top one is TPL. Now, I've never heard of TPL. I don't know anything about TPL. Let's check it out. There it is. Okay, Texas Pacific Land Corporation. I don't know what that is, but there it is. I can look at its metrics. I can see, oh, okay, institutional ownership's up 0.31%. Money flow is in the green. Fundamentals are in the green. Valuation is modest. Technicals are strong. Just like that, found the company. If I need to know more about it, of course, we've got all the resources necessary to do that. But just like that, I just found the winner. Okay. And if I want to look for another stock in that list, okay, click back on the watch list. So I found the first one. Now I can go to the next one. I say, okay, well, TPL looked interesting. Here's one that I'm really interested in. This was one I've seen quite a few times before. CVR Energy, right? Now, CVR, again, not a company most likely you've heard of. Most people will probably say, CVR, what is that? But look at that performance. I mean, look at how well this stock has done over 6 months. It's doubled in price. And the entire time that was going, it probably looked, yep, sure enough, it looked about the same on the score. So, in short, this was discoverable, and you can see that line because you asked that question. There's the line on the left. Notice that it's below 50, then it starts to get above 50, and then eventually now it's consistently above. And notice all that's happening is over time, the score is getting pushed closer and closer towards the 100 mark. It's not going to get to 100, but basically, when stocks are pushing towards the 75 level, which is where this top line is, or this second to the top line is, you're really cooking with gas at that point. You're really on fire if you're getting close to that point. So just like that, I can find a really good stock that actually is showing some strong momentum. I can look up the reasons why, and I can just be with it. So in this case over here, I mean, basically, once these fundamentals got to solid green, this guy just went on a tear from 30 almost up to 40. What was that? 43, or it says the high was 43.50. So that's about what is that, a 50% gain in a matter of a month, just like that. But what does it have in common? It has that nice score is improving, the fundamentals are solid, everything's looking better and better, right? So we can find these stocks all over the place just like that. Okay, so I know it's looking a little too easy, but this is how it is. I mean, this is literally how I find stocks. I just look around to see, okay, what's coming up this week. Here's another stock, TWI, Titan International. Again, I don't know anything about Titan International. Not a stock that I've ever followed, but there it is. Looks pretty good. Money flows green, inner circles green, fundamentals are mostly green. Valuation not so good, but if you're looking for something that's on the move, which is what this is, there's where you get it. So this is fantastic for swing trading, or just more aggressive. So a FedEx would be more like a something you hold in your portfolio for a while. These sort of stocks are more like, hey, I need to see something like I got this 10%, 20% of my portfolio. I want to diversify it into some more aggressive stocks that can really move. That's how we find them, just like that.
Yeah, and surprise, surprise, those first two examples you went over were in the oil and gas sector. This one is construction machinery, but
Right.
that might get hit. But um, awesome, love the scanners. Quick question on that: how often do you see people scanning for these opportunities? Right, like if you did the scan today for the Wednesday, and then
hmm
you did one tomorrow, how many of those same names would you probably see?
Most of them will still be there because it takes a little bit to change the score. So like you can't just change. Well, it could change overnight. Like for FedEx, it did see a jump in its score because it's such a big jump in price. But generally speaking, these are going to be there day after day after day after day. So none of the stuff that I showed you, most of these I've seen before. So these are not like brand new to us. We've seen them before, and these are things that we pointed out. But what it comes down to is everyone has to choose what they want to focus on. So if you really want to find moving stocks that are going quickly, yes, those are riskier because yeah, they are more volatile. Sometimes they have big downswings, etc. I mean, if you look at this one, you can go up to 19 bucks and then down to 17, which is a significant percentage change over a few days. However, if the end game is that you're just looking for something that has some good fundamentals, a solid picture, and looks like it wants to go somewhere, there we go. So I could also go back to that same screener. Let's just go back here for a second. And I could say, you know what? I want fundamentals to only be green. That's going to reduce me to only 6 stocks. So if I'm flexible in the valuation, I'm saying, you know what? I don't really care about that. Just show me anything that has green technical, green insider, green fundamental. Sorry, guys, my light went off. And valuation wise, I don't care, right? Or maybe I do care. Maybe I don't want a red valuation, but whatever the case may be, there it is. Now, in short, when you're looking for something to invest into and hold for the longer term, I would definitely make sure you're looking for something with a good valuation and solid fundamentals. Don't worry so much about the technicals at the moment. Worry more about the bottom line. If you're looking for something that's going to move a lot faster, almost every time the ones that move the fastest are the ones that don't have a solid green across the board. Usually they have some problems with their valuation or maybe their fundamentals are a little weak. But in short, a lot of the companies that we now see today that have done really well, if you actually looked at their numbers at the start, they didn't look that good. Like for example, Amazon, Tesla. I mean, how long did it take before they actually made money? You know, their fundamental scores were bad for a long time, but they kept seeing growth. They kept seeing some certain improvements, and as long as we focus on the right factors, we can find some really good stocks. So to answer your question, you can scan every day if you want, but generally speaking, you could probably scan once a week. Like so, Winter Wednesday is something we're specifically doing for that purpose. But I do look every day myself, and I would recommend if you want to be on top of everything, just jump on the platform. At the end of the day, see what's going on, and if you can find a nice stock, great. You don't have to be in and out the same day. It's not. You don't have to day trade this. This is something that's designed for people that don't have all the time in the world who just want to be able to find good quality opportunities. And I'll also mention that if you tried to find these stocks online, I mean, you'd be searching for a while to try to find anything that quickly. So we found that in seconds, you know.
I think that's one of the greatest components of the software because different traders have different styles, different risk appetites, different approaches, strategies, etc. And they all have the same problem to deal with: is where do I go to source this information? How quickly can I digest all of these things? And I think that's what Madison Trading House does fabulously. And so, once again, anybody watching, listening for the first time, if you want to test drive it for yourself, hit the link in the chat and sign up. Have someone from the team give you a little rundown. I guarantee you will find value in it. And the more and more that I learn about the scoring system, the more and more it's becoming part of my mindset of investing. Is it checking all these boxes? What are the inner score? What are institutions doing? Things like that. And I think you're right that that's the right approach in the long run. And so appreciate the insight. Hope everyone can take a little bit something away from this, implement it. If you're enjoying the content, hit that like, hit that follow, hit that subscribe button. Tell your mama, tell your sister, tell your grandma, tell your neighbor, tell the dog. We appreciate it. We got this Fed number coming out in 45 minutes. I think that's probably going to set the tone for the
Yep.
rest of the day, if not the rest of the week. So we'll get some insight on that next week. Otherwise, Mike, any final words?
Just keep an eye on that, and also remember that this entire week is going to be a lot of news coming out. Keep a close watch on that. Also, keep an eye on China. If they start to do further lockdowns, they last time we spoke they were loosening them. Now they're tightening them again. So everybody keep an eye on that, because if they start to have problems, that's going to drag the economy even more.
All right. And with that, we're out. Thank you, everybody, for tuning in. We'll catch you next week.
Take care.